Monday, November 2nd, 2020, Maneco 64, home of alternative economics and contrarian views. So the man who advised Gordon Brown on economics has now stated that deficits and debts don't matter, well, at least in the medium term, according to him. Before I start, though, and look into this story, I'd like to tell the viewers who might not know who Gordon Brown was. Well, he was the Chancellor of the Exchequer, or Finance Minister equivalent of the UK from 1997 to 2006. He led this country's economy down the drain, eventually to the collapse of the banking system in 07, 08, and 09. What he said about booms and busts, about the fact that he was going to eliminate booms and busts. So who is this advisor to Gordon Brown? He wasn't an official advisor, but I'll come to that in a minute. So this is what Gavyn Davies is saying now, and this is an opinion piece in the FT that came out yesterday. He says the future of fiscal policy without traditional constraints. COVID response has shown inflation and interest rates no longer dictate limits on debt. So let's see what this guy has to say. The writer now is a chairman of Fulcrum Asset Management. He's an ex-Citi guy, but I'll come to that in a minute. So he's saying the surge in public debt in the major advanced economies caused by the pandemic continues apace. Even on the very optimistic assumption that there will be no need for further major economic lockdowns, Fulcrum economists calculate that the ratio of gross government debt to gross domestic product in the major advanced economies will reach about 141% of GDP next year, a rise of around 26 percentage points from 2019. More than half of this extra debt has been absorbed by the central banks. Few economists argue that this remarkable policy response to a global emergency is mistaken. Well, except for me, right? And a few others. But it could profoundly alter perceptions about the appropriate settings for fiscal policy, as the vast expansion of public debt has not been constrained by concerns about rising inflation or interest rates. At least in the short term, the traditional reasons given by governments for controlling their budgets will have less political force, especially in the US if Joe Biden sweeps the board in next week's presidential election. I would say, though, that Mr. Davies, of course, is not being honest about interest rates, because the only reason interest rates are low is because the central banks are printing even more money, creating even more reserves to buy more and more government debt. If central banks were not pursuing that policy and making sure that the market knows that they're going to keep that policy for many years to come, I think interest rates would be a lot higher. So now he quotes Larry Summers, former Secretary of the Treasury. Lawrence Summers, or Larry Summers, whose speech on secular stagnation in 2013 was the most perceptive economic pronouncement of the past decade, has argued that macroeconomics is experiencing a revolution similar to the seismic shift towards inflation control in the late 1970s. From now on, there will be a focus on assuring adequate demand and fairness in our economies, driven mainly by expansionary fiscal policy. Mr. Summers admits that this policy choice will come with risks, but in the immediate future, it will probably bring net benefits. The medicine needed to treat the pandemic may prove appropriate in future years as well. So you get the feeling these guys, these Keynesians, these Citi guys and Wall Street guys, because they are creatures of that, these PhD economists, they think it's okay in the short term. They're always kicking the can down the road. They don't care, right? The structural economic changes that have shaped the policy response to the pandemic have been persistent for several decades. Real and nominal interest rates in advanced economies have trended strongly downwards since the early 80s, mainly because private savings have been excessive relative to investment, the prime symptom of secular stagnation. Another statement I don't agree with that much. So it says inflation has been held at very low levels for the same reasons. Well, ask the people who are struggling with their standard of living, struggling with the cost of living, people who are dependent on food banks here in the UK, families that need to send both parents to work in order to make ends meet. Ask people who can't afford to buy a basic home or even afford to pay rent, Mr. Davies. But you will see what kind of guy he is in a minute when I read about Gavyn Davies. Let's finish his opinion piece, though. Inflation has been held at very low levels for the same reasons. Encouraging central banks to expand the monetary base by acquiring government debt. This form of monetary expansion has defied the pessimists by having essentially no effect on global inflation. Yet tell that to the people everywhere around the world, especially in emerging market economies or other poorer countries, how they're suffering with their cost of living, with their currencies collapsing. And it's going to be the same thing here in the UK. You can trust history on that, not me. Anytime you print money, you monetize debt like they're doing, you're going to have the currency collapse. That's what Mr. Davies doesn't tell you. Leading central bankers, including U.S. Federal Reserve's Jay Powell and Christine Lagarde at the ECB, are therefore demanding more rather than less support from fiscal stimulus. This is very different from the attitude after the 2008 financial crisis, when many leaders in global policy making argued the rise in public debt should be brought back down. Such has been the change of mood even amongst the most orthodox of economists, such as Olivier Blanchard, that it is natural to worry lest the temptation to spend more and tax less will get out of hand. There are plenty of causes, for example, the green economy, a universal income, and infrastructure renewal that would encourage much higher budget deficits under an administration led by Mr. Biden. With the buffers of inflation and interest rates removed, how can investors tell when politicians are delivering too much of a good thing? Although solvency crises seem improbable in advanced Western economies, that's a huge assumption, I would say, which can pay down debt by creating money. That's just a complete oxymoron. Because, you know, in today's monetary system, the only way you can create money is by creating more debts. So how can you pay down debt by creating money, Mr. Davies? Another huge fallacy there coming from the Gordon Brown advisor. A wise government will want to limit the risk of debt ratios rising indefinitely. Bond markets and inflation may be somnolent, but they are not comatose. When the pandemic is over, policymakers should therefore seek to limit any further trend rises in debt ratios. With interest rates below the growth rate of the economy, debt sustainability models indicate this can be achieved while continuing to run deficits on the primary budget balance, i.e., excluding interest payments. But there needs to be a ceiling on deficits over the economic cycle. What does that mean, Gavyn Davies? What economic cycle? For example, for the U.S. to hold its debt ratio below 140% of GDP, it could run an average primary budget deficit of around 4% of GDP, assuming nominal interest rates at 0.75%, real GDP growth at 1.6%, and inflation at 2%. This is broadly in line with the IMF forecasts unannounced economic policy from 2022 to 2025. The temptation for Democratic administration would be to run even bigger deficits than this, in which case debt ratios and fiscal risks would certainly begin to rise even before adverse demographic trends demand still higher borrowing in the 2030s. At some point, well, this is the kicker, he kind of writes himself a put, so to speak. That will reach a limit, but most economists are now betting that this is a very long way off. So yeah, do the wrong thing for now. It doesn't matter because we won't be around when all hell breaks loose. But I have the feeling it's going to come back to bite Mr. Davies a lot sooner than he thinks. So who is Gavyn Davies? So I'll just quickly read through here his Wikipedia, and then I'll go to an article from The Guardian from quite a while ago talking about Gavyn Davies. It says he was born November 27th, 1950, former Goldman Sachs partner and multimillionaire who was the chairman of the BBC from 2001 until 2004. On January 28, 2004, he announced that he was resigning his BBC post following the publication of the Hutton Inquiry report, which heavily criticized the organization. So we're going to go back in time, 21 years exactly, to look at what The Guardian, which is a left-leaning, labor-supporting newspaper, said about Gavyn Davies. This is from 18th of March, 1999, a long time ago. It says, he's good and very rich bastard. He's Britain's most successful economist. He dines with the Chancellor, Gordon Brown, and has homes in London, France, and Devon. He is deciding the fate of the BBC. Oh, and yesterday it emerged he's about to become $50 million richer. Larry Elliott on The Men Who Got It All. So let's just quickly go through this so you can see how close he was and might even still be to Gordon Brown. Gavyn Davies is one of the people who have it all. Friend of Tony and Gordon, Tony Blair that is. The city's highest paid economist is one of New Labour's movers and shakers. Gavyn, said one of his rivals, is the most successful UK economist in terms of influence and wealth since Keynes. Well, that's not a good sign there either, Keynes, right? There are those who might doubt whether Davies could ever be as influential as the men who revolutionized economics in the 20th century. His wealth, on the other hand, is legendary. Davies is rich and following the flotation of the investment bank Goldman Sachs on Wall Street later this year, set to be a lot richer. Details of the deal made public earlier this week show that the 221 partners of the privately owned firm, of which Davies is one, will receive shares worth $54 million each. I've spoken before about the fact that Gordon Brown sold half the UK's gold. He pre-announced it back in 1999. The rumor about that is that bullion banks like Goldman Sachs and JP Morgan were caught short bullion as usual, and the price was spiking. So that was a favor from Gordon Brown to people like Goldman and JP Morgan and other bullion banks to pre-announce the sale of half the UK's gold, and that led to the price drop from around 300 to around 250. That's the kind of connection Gordon Brown, Goldman Sachs, and Gavyn Davies had to each other. I have no proof of that, of course. It's just speculation. But I think it's a valid speculation. What's more, Davies and the other masters of the universe at Goldman's will also share in a bonus pool tied to the firm's performance after the sale is completed. So you see, 1999 was a very important year for Goldman Sachs. And if they had lost billions shorting gold, this IPO might not have worked out very well for the partners. You see what I mean? On past form, this too will be a nice little earner, leaving Britain's best known economist with few financial worries when his pal, the Chancellor, abolishes the married couple's allowance and mortgage interest relief next year. That Davies is an influential figure in the New Labour project is beyond question. His wife, Sue Nye, is Gordon Brown's political secretary, and he counts the Chancellor as a close personal friend. He has dinner in Brown's flat above 10 Downing Street, a privilege not normally accorded to city economists, and his pronouncements on the state of the global economy are regarded as those of a guru. Thwarted in his ambition to be the next governor of the Bank of England, Davies has now turned his hand to something that is potentially more fraught with danger than setting interest rates, sorting out the long-term funding of the BBC. That's the kind of character Gavyn Davies is. That's how closely related to Gordon Brown, the Chancellor, he was. And I can bet he advised Gordon Brown on the disastrous economic policy of the New Labour movement that led to the collapse of the UK economy, that led to the collapse of the banking system. Yes, Gavyn Davies did well from the Goldman Sachs IPO, maybe at the expense of half of the UK's gold reserves. Who knows? I can't prove that. But one thing's for sure, Gavyn Davies doesn't have the British public's interest at heart. He's what people call a champagne socialist, in my opinion. So how do we protect ourselves from this policy, this kind of philosophy that seems to be spreading right now, that debts, deficits, and government spending don't matter anymore? Well, there's only one way, and that's through precious metals, continuing to acquire, stack physical gold and silver. By that, I don't mean paper. I mean real gold and silver. So I've been asked many times over the last 4-5 years since I started my channel where people can get gold or silver, gold coins, silver coins, or bars. And I always tell my viewers, do your homework, search for the best deal, make sure you get a reputable firm to deal with. And because of that, I provide a promo code Monaco64 at goldinvestments.co.uk. Gold Investments have been in the City of London since the early 80s. I've known the family that run the business since 2002. So if you use Monaco64 promo code, you get a small discount. And in my opinion, dealing with Gold Investments will give you peace of mind because they are a reputable firm. And they will ship gold and silver, not just in the UK, but all over Europe and other countries as well. So there you go. If you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And make sure you also hit that little notification bell to be notified of all my new videos. And you can also follow me on Twitter, Facebook, and all these other platforms below here. I wish you all a great day. Take care. Bye.